Want to know the secret to maximizing your cash flow by choosing the right mortgage payment option? Stay tuned. Hey guys, this is Fabian from the Lending Lab, a mortgage and finance broking firm that helps customers reach their goals and take their next step in their financial journey. Okay, let's talk principal and interest versus interest only. The difference between the two will come down to a couple of different things. Now, before we dive in, disclaimer time, this is general information and it's not tailored to your individual circumstances, goals, or needs. You should get individual advice on your circumstances before you make any decisions. Okay, now usually when you make your mortgage repayments, part of the payment is the principal of the loan, and that will gradually pay off your home loan over a 30-year period, depending on your term. The other component is the interest that the bank charges on that loan. Now, if you have a variable home loan, that interest amount can increase or decrease, but the principal will always stay the same. The normal type of repayment is principal and interest, so you gradually pay the home loan down the entire time. Now, usually people pick a 30-year term, but it can be up to the individual. Now, an interest-only repayment option works a little bit differently. If you opt to go this route, you basically make an arrangement with the bank that allows you to not pay anything off the principal for the first few years. You're only paying the interest that accrues. This means you're going to have a drastically lower repayment amount each month. Of course, there are a few downsides. If you're only paying the interest, you're not actually paying your loan down. So, for example, if you had 5 years interest only and all you did was make the interest repayments at the end of the 5 years, guess what? Your home loan is still $500,000. Now, if you're an investor, this may be a really valuable thing to optimize your cash flow, particularly in the first few years out of investment property, and it may help you maximize some tax advantages as well. But if your long-term strategy is to pay your debt down and increase your equity, this might not be the right decision for you. Now, secondly, it's going to impact your borrowing power. Now, given that most home loan terms are 30 years, if you go interest only for 5, it means that you have to pay off the rest of that home loan over 25 years, not over 30 years. So, banks are going to be a little bit more cautious in how much they're going to lend you, and you're going to need to have a higher income to support that. So the longer your interest-only term, the more brutal that second part's going to be. Banks might also increase your interest rate for going interest-only, so although your monthly repayment might be lower, you could actually be paying more in interest over the long run. Now, obviously, there's some advantages and disadvantages depending on your circumstances. So it's important you consider all the options to weigh them up, and a professional can really help with that. But that's all for today. Would love to hear any questions or comments you have below. And otherwise, do the YouTube stuff, like, comment, subscribe, all that stuff, share with your friends. Thanks, and we'll see you in the next one.